Ladies and gentlemen, Forex market, we're back with a second analysis of the day. This time we're tracking the Canadian versus the Swiss franc. We owe you an update on this one. We haven't been here for quite some time, and we were waiting for the right moment to revisit the situation here, because basically price started to break above our mental stop loss level. Our mental stop loss level, which was our, just our main point of reference. Everything was, based on this particular key level, 68.57. Supposed to be the last line of resistance. And we've based our stop loss level, we've placed it according to that level. We took a healthy distance just to keep ourselves safe, in case there's going to be some noise. And we think this was the noise. Basically, this is exactly what it was. That's exactly what we tried to avoid. The type of action where price is taking us, beyond a particular point, which we feel could very be the last line of resort, so to speak. But eventually it comes back in and end up the week inside, meaning just spiking that level from a weekly perspective. I'm going to show you how that looks like, so you can see exactly what I'm talking about. Now, this is not the first one. Right, this is not the first one. It's actually the third one. It's been marked here by that yellowish rectangle. You can see this is the third one, probably the highest one by a very tiny margin of the first one, but still you can see what's going on, right? Price was just battling that 68.57 relentlessly for 3 consecutive weeks. That is crazy. Now, whether this level had been able to, prevail or not, I mean, it looks like it did. But I think I said that after the first week, and I think I said it again after the second week, and here we are again, right? The third time. But it just shows you how tough that 68.57 is as far as resistance goes. And we're still here, holding our short position, especially now we think we got some support to our bearish conviction here. I mean, I'm talking about by price action crossing back below 68.57 just before the weekend, just before the end of the official week cycle, and eventually just spiking that level. This is how it looks like from the day perspective. So we think we're pretty much back in business, right? That's why we wanted to keep the position alive and to wait till the end of the week. That's exactly why. Now, stop loss level is still in its original placement, 69.50, and we want to see price pushing forward. Well, just pushing downwards, basically, right? Start to move away from that area. 68.57, that's the danger zone. So once we have that on record, we can start to adjust the stop loss level accordingly. I just want to remind you, we've been very unfortunate with missing the target when price was dropping so quickly right from the get-go, the first couple of days, and and we missed the target by about 20 pip, I believe that was. And then of course price took us to that roller coaster move, which went mostly against us. But maybe maybe it looks like we might be back. That would be back from the dead, literally. And we can let's see if price can push downwards a little bit, and then we'll feel more comfortable about what I'm describing here pretty much. If we're back in business officially, we'll be trying to re-increase the position again and push it bigger before we hit that 67.27. Is going to remain our target. Nothing changed with as far as our game plan goes. So yeah, it's going to be interesting to come back and follow up on the situation here, and I'm pretty sure that's what we'll do soon. Alright guys, that's about that for today. Have a nice trading day, Forex market. We'll see you tomorrow. Cheers.